Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, October the 28th, 2025. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. High-level overview, Mr. Tucson, wave 1 is done. We're working on wave 2 down. And the only question is it over here or are we going to go lower first? Last time we were in this situation, I talked about the same thing. I said, I don't think this bounce is going to be the breakout. I thought we'd end up with a lower low. We did get that. What about this current bounce? It's still showing signs of no, we should break lower until price proves otherwise. But just remember in the back of your mind that this wave 2 at some point, whether we do get down here to 80 that we originally talked about for over 3 years ago, or we stop somewhere between this 95 and 80 range, or somewhere in between, once wave 2 is over, the bias is we're going to go breaking to new highs. That's the plan. So jumping into the charting platform, we can see that the reason we still believe we're going to break lower is like the last time over here, we had a low, high, higher low, higher high, and we rallied into our area that we expected a reversal. And as soon as we got into that area, we eventually broke that 618 back to the downside, which was this 98 and change area. And eventually, as we chopped for weeks, we finally did come down and make a new low. Now it looks like we got the same type of move. We talked about it over here when we started to push lower. We couldn't break it. We then said we're likely going to go up here toward the Magic Fibo. We tested that. We expected a reversal from there. We hit the Magic Fibo. We came down and tested the 618786 off of this low to high, and we're kind of stuck. We've been that way since last week. We're still stuck between the 618 and from the recent high to low, the 618786 rejection zone. We're below the Magic Fibo. That's bearish. We touched it and pulled down, and then when we retrace back up, we're still below that 618. That's still bearish. So the big number to watch is going to be this 97 over here in 97.50, 97.48, because like last time when we did this 3-wave up, we finally broke the 618, and that signaled, even though it took weeks to finally grind down there, we did make a new low. So bottom line is, if we can start taking out that swing point low right here, the bias is we're going to go on and take out the 97.50, which in turn would set the tone for us to start breaking to a new low, right? So let me compress this just a touch so you can see these prior levels. And from this low 3-wave correction high, we didn't quite reach the targets. And since we did make a new low, we did bounce, but when this is finally going to reverse, if this wave 2 is over here, all it needed was a new swing point low And that's what we got. So again, could we go down to this 95 area, which is overlapping between the two? Yes, but we still got to get below this 97.50 to set the tone. In the interim, what we don't want to see, if you're a bearish mentality and you'd like to see that dollar continue its journey lower, so our euro dollar continues higher, pound dollar continues higher scenario, then we need to see this happen where we start breaking out that swing point low. To set the tone, we're going to come down to these extensions. And by getting to these extensions, we take out the 97.50 area, which then sets from that low to high. Yeah, we now have a 75% chance we're going to make yet another new swing point low. So this level, I think we can call it. If we actually come down and make a new low, even before we break 97.50, the writing's on the wall, we should make a new swing point low. But if you're a purist at heart and you follow the rule without any exception, then when we close below 97.48, remember it's a candle body, not a wick, the body of the candle, then it sets the tone. We're going down to 95, which means a new swing point low. Fair enough? What we don't want to see, again, if you want to be the bear in this equation, we don't want to see this thing break out above the Magic Fibo, retest it, then go bouncing toward 102. Everybody short the dollar, anything but the dollar trade, and there are a lot of big players up there at that 102. And if price can pop to 102 area, that should get maybe even a short squeeze to send that thing blasting off. So be careful. Just because we break the Magic Fibo is not a guarantee that this is over. As long as we're below the Magic Fibo, it doesn't necessarily guarantee that this is over, obviously, that it's more likely we're going to make a new swing point low, but the same would be true. Just because we're below this Magic Fibo does not guarantee we're definitely going to make a new low. The percentages are we're going to make a new low, and we need to see this swing point low right there taken out, and that sets the tone. We're going to go lower. And by going lower, that sets the tone of taking out that 97.50. We ultimately will go and make another new swing point low. Fair enough? So my bias is I always like to give you a primary direction and an alternate. The primary is down, and only when we see a break above, retest, and we get toward that 102, then I'd likely call this the end of that wave 2 down here. And this is probably the end as we start grinding, probably over the next few years, grinding higher and ultimately going breaking out. So in the interim, force price to prove itself. And right now, all of these 3-wave corrections stated we need a new low. And this is not very bullish price action until it is. This is not. So that's why we believe we are going to go making new lows again, up and until price proves otherwise. And how do we do that? We have to go breaking above the Magic Fibo, come back and retest, hold it, then blast off toward 102. We take out 102 with that short squeeze, this thing's going to go way higher. And I don't see the dollar going up into the 105, 6, 7, 8 kind of thing, and then coming all the way back down to new lows, right? That's kind of the bigger picture. Alternate plan of action is we could go breaking out, but theoretically, is it really an alternate plan? Because we know at some point the wave 2 will be done. Is it here? Is it here? Or is it somewhere in between before, Ian, we go blasting off and make a new high? Just remember that at some point the wave 2 will end, and we are expected to go making new highs above that 114.72. That is the plan. Question is, how much lower do we go? And that's what we've been discussing, looking at current price action. This does not look real bullish. We're below the Magic Fibo. That's bearish. We retrace to a 618, have been failing. That's bearish. All of this chopping, overlapping price action still looks bearish. So there's a lot more checks on the bearish side of the equation than the bullish side. Fair enough? But be careful. Be in a position of authority. So when we talked about this thing rallying up here, we said you could sell that, but be in a position of authority. And if we start to break above, retest, then I think there's a good chance we're probably going to make a run toward 102. Doesn't mean we're going to hit it. But if we do, there's a lot of big players, big money shorts up there. And if that's the case, that short squeeze could trigger and this thing could go parabolic. All right. So why is the dollar important to know where it's headed? Because then we have a great understanding of where the euro is headed. And just like last week, what did I say? I think we're going to bounce off of this level and start moving. But just like the dollar index, the euro dollar is stuck between support and resistance, right? So from the recent bounce to the high, we held the 61876 area back to the downside. We're bouncing out of that, but we have major resistance up here, which is the 618786 off the prior move. So you can see even the bigger move here, we got a 618786 further up the food chain. So when do we get full-blown bull? When the dollar starts breaking its swing point, the euro starts breaking this swing point higher, as the dollar would break that swing point to the downside we just identified, this swing point low. By breaking this low, the dollar is projected to continue down in 97, 96, and by getting down 97, 96, it then sets the tone for going down into the 95s. So we're talking bigger move. So inverse relationship, that euro dollar breaks this swing point high, it sets the tone. We're going to this target 118.15, 118.46. And by getting to 118.15, 118.46, that sets the tone for our upside targets of 119.74, 120.22. Got it? So again, I'm in a position of authority and I'm holding steady that I expect this thing to grind higher more than grind lower. But that's why we talked about it way back when we talked about the software reversal and the daily came in reverse. We popped, I said, get into a position of authority. If we saw this, Emil, where we had a slingshot engage, disengage, we got a low, we got a high, we got a higher low. And because we disengage right here, red's hooked up, blue's hooked up, green's hooked up, what does that typically tell us? High probability is we're going to continue to grind, make a new swing point high, and continue to make a new high. Got it? So on the charting platform, that is what we're looking for. We take that swing point out with the daily engage, disengage slingshot. The probability we're going to go up here and break out is still very high. So those of you still in this trade, your beginning targets are 1815, 1840 area. And once we get there, the next cluster is going to be 119.70, 2022. Got it? So this would be my initial target, this little guy up here. So I'll do it with this little highlighter. This is my initial target for this thing to continue to climb. And then once we reach that, the next target is going to be that cluster, that 119, 120 area. Got it? All righty. What about the pound dollar? Kind of ditto. We're just kind of chopping and grinding here. But once we take out the swing point high, the probability we go into 135.60, 135.90 area would be set. And if we can reverse this, looks like a little double bottom here. And if we break that, I don't see the pound plummeting lower. If the dollar is going to plunge lower, then the pound dollar is going to go higher, just like the euro. And when we take that swing point out, your initial target's going to be 135.60, 135.90, and then followed by, once we get there, the next cluster is going to be 137.90, 138.50. All right? So on this one, we talked about being in a position of authority, and it looks like a double bottom. So if your stop loss is still in profit, then you probably got pipped out. So what am I looking to do? Get back in, get to another position of authority. So we'll come down here to the pound dollar, and I'm looking for this right here for my re-entry, as we've done this a few times, right? Pound reversed, went up a couple of hundred pips, got to position of authority, got pipped out, bought it again, got to a position of authority, took some profits, got pipped out. So what happens, Emil, when this baby hooks up right there, Mr. Tucson, Ian, James, Harold? When that baby hooks, we get back in, and we'll look to get to a position of authority. So what if we just keep slingshotting lower and lower? Well, like I said, it's doubtful we're going to keep going lower and lower if that dollar breaks down. And it's very logical we're going to go cycling up in the coming weeks. As the dollar breaks down, this thing will go soaring higher. Amen? So be careful. That's why we talked about it last several weeks. We even talked about setting the software to buy the trigger higher and get into that position of authority. And I warned you, once you were in it, be in a position of authority, because we could see that. And then this next one, same thing, but you're talking, you get in a couple hundred pips, take some profits, leave a little something on the table if it continues to run. If not, it pips you out, you make more profit, and then you rinse and repeat. So is the third time going to be the charm? PAI hook, made some profits, PAI hook, made some profit, PAI hook, we get the cycle, and this baby goes blasting off. Not only break the swing point high there, but then start targeting our extensions, as we just discussed. Fair enough? All righty. Let's continue. Got a lot to cover. This week is big Fed week. We're going to go over that in just a second. I do think they're going to cut rates 25 basis points as expected, and that occurs tomorrow. So price action might be a little muted, but post the jawbone and the rate cut, and depends on what he says, we could see that dollar go popping and dropping and a lot of whipsaw in here. So I expect we're going to see a lot of volatility even in the currency markets, as that should unfold starting tomorrow. In the interim, we might see some muted action in here until the Fed does what they do, until Powell speaks with a jawbone, which you'll see how that plays out. Fair enough? So is it possible that we could go just a dip a little bit lower? This would be a logical area where we could dip down to. And if we dip down to on the pound, and then my daily PAI hooks after that, that's what I'm looking to buy. And could it be we just keep rallying lower high, lower low? Anything's possible. If the dollar continues to break to the upside, this will continue to break to the downside. But like I said, if the dollar starts tanking lower, I don't see the pound dollar tanking lower with it. I see this thing blasting off. So that's why I'm looking to buy this dip and look for the opportunity to catch part of that blast off, like we did here, a couple of hundred pips, like there, a couple of hundred pips. And what was that? That was that daily PAI hook. The next one, daily PAI hook. And the third time, is that going to be the charm that finally goes breaking out, reaching these upper targets? That's kind of the plan. Alrighty? Dollar yen. Of course, as the dollar breaks down, the dollar yen typically breaks down. So if we continue to break down and the dollar breaks its swing point low, opening the door to lows, well, same here. If this dollar yen breaks this swing point low right around that 149 area, then the probability we go down toward 145, 144 looks good. And this might be a little tasty treat that we could short this once we get a candle body close below 149, short it down to 145, 144 area. All right. All righty. What about the pound yen? Like I warned you, Randy, look at that move. We got the bounce, went right to the danger zone, and what did I say? Look to establish a short position because this bigger picture is showing opportunities for some massive downside. And this goes back to, let's go back several years, back to COVID, when I was a major bull of the pound yen and I made a wild statement, not a prediction, but I can anticipate with the best of them, that the pound yen would go up about 8 to 10,000 pips. It would go and test that high, break the high, and I'll show you on the chart, which we've talked about this numerous times, but show and tell and giving you insight in advance is the key here, not after the fact. And back during COVID, during this low, I did make a statement. We're due to go test this high and likely break it. And that was that multiple thousands and thousands of pips. And then we got to the zone, we hit it, broke out. And then I said, look out. That was the carry trade unwind last year. And then we got that move, and I was like, uh-oh, watch out. That because of this price action, now I'll go back over here to the charting platform. And this was the carry trade unwind last year. Since that low, we got a lot of overlapping action, and we were only able to rally into the 618786 danger zone to fail, overlap, fail, overlap. And this most recent push to a new high, we did slightly break above it, but we were still at that lower high. And I warned you that breaking out, be careful. I'm looking to establish a short position because this bigger picture, leg one, overlapping consolidation, looks like we need another leg two down. Amen? And we went on the latest high to low, went right to that 618 like we did over here. We're doing the same. So I'm looking for when we break this low. Next up is the Magic Fibo, somewhere around that 198, 197 and change. That's where this orange line is, the Magic Fibo. Once we break that, the doors ajar to start coming down to some extensions. And as we start breaking some of those extensions, we're likely coming and making a new low. From that bigger picture, we got to run this. Let me move some of these lines, clean that up for you, give you that bigger picture, because I know I have so many on here, but this is what we do. We give you a very in-depth review so you know what to expect, when to expect it, and why to expect it. And ultimately, if it doesn't play out, how you play that trade otherwise. So if we go from the recent high, that's a 3.2. Let me get rid of all of this and start this move here. Bring this low from that carry trade unwind of 2024 up to the current high. If we start breaking down, which it appears, and we break that low, it sets the tone for the Magic Fibo. We break the Magic Fibo, then it sets the tone from that low to that high meal. We take out that low right there. The arrow's pointing the wrong way, but that guy sets the tone. We're coming to the Magic Fibo. We break that, then it sets the tone. We're going to come down here to that 189 area. Why there? That would be the 618 support zone from the low to the current high. we start breaking 189, 185, which is the danger zone of the 618786, then check this out. It sets the tone. We're going down to 176, 173. That mimics what we've been talking about needing to make a new swing point low here, that this looks like it's a big A. All this overlapping, expanded flat because of this drop. We retraced at least 90% of that. And this would be a B. And then we come down in C. That's kind of the plan. And that's still thousands of pips to get to this low, right? So this is what we talked about when we were looking at the software. And I said on this monthly chart, we're going to expect kind of what we do. We call that paint the Picasso, that disengaged slingshot was going to disengage and we get a cycle down, cycle down. And once we take out the swing point low, which is around that 183, it would set the tone for this engage disengage to make a new swing point low. Well, you're talking almost a couple of thousand pips from where we are to get to that swing point low. Not too shabby. And if we do, we start looking at those extensions, we're talking another several hundred more pips. So this is why I was looking to establish that short position and expecting this thing was going to go lower, and painting the Picasso for you that this is likely going to go lower in the coming months, and this baby will start breaking down. That's the plan. Fair enough? All righty. So any questions? Establish a short position, be in a position of authority. We take out that low, which is on the daily slingshot disengage, sets the tone. We're going to this low. We start taking that out. Then we start setting the tone toward the Magic Fibo. We break that. Then it starts looking around that 190 area, which again is over 2,000 pips. 190 to 200, that's a lot of pips, my friends. A lot of pips. Amen? All righty. So let's continue. What about the big, not that one, this one, the calendar? What do we have tomorrow? Mr. Fed speak right there. And what are we going to do then? Actually, let me put the whole week up there. We have on Wednesday FOMC. The bias is they're going to cut it from 4.25 to 4.0. That's the plan. And this takes place tomorrow afternoon. I do think they're going to do it. And the reason why is our DGS2. Mr. Tucson, here's the most recent rate cut. It's a range that was 4.5 to 4.25. And since we cut it from 4.5 to 4.25/4.0, look, we've been kind of hanging up near the upper end of that. So we got plenty of room from where we currently are to where the current 2-year maturity rate's sitting. And remember when we used this low high, we broke the 618786, so that meant we had a very high percentage. We were going to come down here, test at 3.3, 3.25 area. Well, that's kind of what we're doing. It's kind of grinding. So we got plenty of room to do that quarter point cut. So my humble opinion, not only what they pretty much have already priced in, but I'm in agreement with it, right? I'm in agreement with this cut because of this DGS2 picture. For those of you not familiar with DGS2, it is the 2-year maturity rate, Treasury, right there, 2-year Treasury maturity rate. And why is it important? Go out to a weekly view and bring it into perspective. The Fed does not make the interest rate policies. They follow and chase the 2-year maturity rate. So people always thought, well, it's the Fed that decides when they're going to raise and when they're going to cut rate. Well, they actually chase the 2-year maturity rate. And when it goes soaring higher, this orangey line, goldish orangey line, is the Fed raising rates to chase the maturity rate. And then when that rate crumbles, the Fed cuts rates to chase it down, chase it up, chase it down, chase it up, chase it down, chase it up. Now notice these big arrows. Every time the blue line gets below the yellow line or orange line, we typically have some sort of financial crisis. Dot-com bubble burst back here in 2000, 1999, coming into 2000. We were below, and then the maturity rate crumbled, and the Fed had to cut rates. Then coming back with the recovery into the 2007 financial crisis, again, maturity rate was below the Fed rate. So over here it happened, we had a catastrophe. Over here it happened. What was that? That was the 2007 financial crisis. Over here was COVID. Even before COVID hit, this is the same picture. That's what that arrow's denoting. We're below. Typically it meant we were going to have some sort of financial crisis. So look at what we have now. We're below, we were below here, we're still below, right there, meaning the 2-year maturity rate. So is this the beginning of Elizabeth, I'm coming to join you, honey? Maybe. Or every time it's a little different, not exactly the same, but yet ultimately plays that out. And this again was COVID. So what's this one going to be? Elizabeth, I'm coming to join you. Or we're going to see something like this, where this is the initial surge, we got a little correction, and we get one more inflationary pressure. Why could that happen? Well, only way to really curtail our big 37 trillion in debt is to let interest rates go way high. One way to battle it out. So could we get another surge of interest rates still one more time before the big one comes? Or is this the beginning of going into next year, blow off top, Elizabeth, I'm coming to join you, honey. But that's what I watch. This little graph. And how do you do that? It is the DGS2, Delta Golf Sam 2. That pulls up that. And then you hit the plus sign and you add the Fed funds right there. That's this line. Fed rate, this orangey line, and then this blue squiggly line is the 2-year maturity rate. And that's how you tell, how do I know if the Fed's going to cut or raise rates? See how close we are, and if it's ever too close and the Fed cuts rates, they're worried that if they cut it and we get this rally, I mean, when Powell did his little 50 basis point here into the last year's election, I thought it was a mistake. And sure enough, this thing rallied and scared the living daylights out of him, thinking, uh-oh, I just cut 50 basis, I might have to raise rates. But it held and it started to push lower, and he's like, whew, that was dangerous. So we got plenty of room right now. On that weekly chart, you go to the daily, you stretch that out, and you can see what that looks like. We do have room between the current rate up here and where the maturity rate is sitting. And the bias is we're going to grind lower in the coming days and weeks as they lower rates back down, right? Another quarter point. Any questions? So based on this picture, and the big day is tomorrow, I think they're going to cut rates, in my humble opinion, as they show expectedly here. Far enough? All righty. So what does that mean for the markets in the big sense of the picture? Well, how about this call, Emil? Early in the week, we said this was going to grind up toward at 68.50, 68.85, highest probability. I'm still looking for a pullback before the final blow off top. But if this punch junk euphoria continues, we might get that blow off top a little bit sooner. So be careful at these nosebleed sections. We just cannot continue this forever without some bigger pullback. And if this is the blow off top happening already, then be extremely careful. So I'm still was looking for some sort of rally, pullback, blow off top, finish move, and then a much bigger correction. So maybe we need to slide these targets over a little bit, and maybe we grind up here first, then get the pullback, then get one more push. But we'll keep an eye on this. But if you're long that move, which was hundreds of points, I would definitely be in a position of authority because this thing is likely going to take a dip. Now, another thing that's very likely, look at this SPX. See these gap ups? That's why I look at ES. It's the futures because you typically don't get big gaps, and we actually got one here. Go to a 15-minute, and you can see we actually got a little gap up right here. So typically with the price action of futures, you don't have gaps that aren't filled, right? That is extremely unlikely that this gap right here will not get filled. Mr. Tucson, is it drifting going to lower and fill the gap before FOMC? Or is it Mr. Powell speak that's going to force this thing to dip down in here to fill that gap? But for futures trader, the further we grind away from that gap, the more likely it will get filled. And that is traditionally, historically speaking, we don't leave gaps. We need to fill that. And that's back toward that 68.60 down to about 68.20. Quite the gap, right? Look at that. From that close to that open was quite the gap. Any questions? So be careful. This means because of my graph over here, I was looking for that, reach the targets, pull back, then another push. Well, this might be that little drop to fill that gap. And then we could continue higher, or we could set the tone for that bigger correction. But be careful. This does not hold typically in the futures arena where you have gap ups that do not get filled. I would not be surprised if we don't fill it prior to the Mr. Fed speak, that it happens maybe while he's jawboning that whipsaw price action to fill that gap. And if we don't hold that 6,800 level, then that sets the bigger picture for a bigger correction. And that was kind of this picture I was showing over here, was to get up to 68 area and then pull back toward that 67, 66 area. So we fill the gap and we don't hold the gap, then we're likely coming down here. So this expected move is likely still going to play out. So be extremely cautious. Again, is it possible that maybe we pop up here toward that 69, running toward 7,000 before the Fed speak? Right? Today we just keep grinding higher. Tomorrow into the afternoon we grind higher. Then the Fed speak does it. We shall see, but expect volatility around tomorrow afternoon. And the more this grinds, the more likely we're going to get that correction. And including on ES, that gap fill, which is this zone right where this was. It was supposed to stop here and go down, but we got a little ambitious to the upside. That's why I would definitely be in a major position of authority, because yes, this thing could go a little bit more, but the likelihood we're going to fill that gap is very strong. And if we don't hold it, what are we likely going to do? Come back and retest from the recent low and this high will be adjusted. You kind of move that up a little bit to that high, and you say, okay, well, if we don't hold that gap fill, where we're likely to go, and look where that 618 is sitting, right around that 67 area. And the 786 is right there around that 66 area. So that still fits the mold that maybe we went a little extra, but if we don't hold the gap fill, we're likely going to come down and test that 618, 786 off of this run. Got it? All righty. So don't think that these are, we don't have to worry about these. We're going to get some sort of correction. Maybe it's Mr. Powell speak that at least gets the gap fill on that. Then we go higher, or do we grind up here to get the bigger correction? But it's coming, so make sure you're ready for it. NASDAQ, kind of in the same boat. We did exceed the targets. Remember when we talked about this last week or even the week before, that as we closed above that 25,000, we said we were going to go toward 25.6, 25.8, and we're then there, been there. Now we're at 26, starting to push toward the next target, 26.2. Still think we're going to reach that. Even if we get a correction, I think we'll still get up here and continue that blow off top. So the only question I have now is this just going to keep grinding? And even with the rate cut and the punch junk euphoria, it just keeps going. Then we get the Elizabeth, I'm coming to join you, and this is the blow off top, or do we get the correction we're looking for, followed by the next push for the last little push of blow off top? So, you know, we did break this a little bit to the upside. That really means be in a position of authority, because I'm still expecting some sort of correction before the last push into the end of the year. But like I was saying, if this just continues climbing higher without any kind of pullback, that's really setting the tone for a big pullback toward that Magic Fibo. And we haven't visited the Magic Fibo on the NASDAQ in quite some time. Look at that. Was way back here during the tariff talk, Liberation Day down in here. And since then, we broke above and we never looked back. So we're due for a visit. Sooner than later, but no later than later. So yes, I did say we would go higher just like we anticipated. It went right to the targets, and plus a little something extra, a little Louisiana land yap on that, a little something extra. But I would definitely not just be loading the boat at these highs, expecting this punch junk euphoria is going to continue forever. It will not. And we're looking for some sort of dip. Maybe it's Mr. Powell speak tomorrow. Could be this afternoon. Just be prepared for some sort of dip. Amen? And then we'll talk about, is the dip the end, or we do get that last blow off top before it's all over? And Elizabeth, I'm coming to join you, honey. What about the Russell? Russell is grinding right to the targets we talked about several weeks ago when we had the high to the low. We broke the 618. That said, we were going to 26, 27, and we're grinding toward that 26 target. So when do I think the signs and symptoms of perhaps, Elizabeth, I'm coming to join you, honey, starting to surface? I wanted to see the Russell up here at its levels. I wanted to see ES and NASDAQ at its blow-off top levels. And I wanted to see what we call the equal weighted RSP, S&P 500, RSP, the equal weighted ETF. I wanted to see it up in its extension, and we're not quite there yet. So I don't think this is the big one. And even if we get that pullback I'm looking for, the gap fill, maybe even come down to the daily Magic Fibo level to bounce, I'm still looking for this when all the things are there. And then also our Nikkei it's pushing into the target. We talked about that 4,800 to 5,400. My next target is like this 53 up here. And we're kind of grinding. Let me zoom that in for you. We've been kind of ripping higher. That's a pretty steady climb. And what I'm a little disappointed is during this period of this climb, right? During this big grind higher on global liquidity, my good friend down here, Bitcoin, has not been participating. Okay? It's not really participating like the global liquidity has been climbing. That's a lot of overlapping, chopping, grinding, as opposed to that picture we saw with global liquidity. So that is a little concerning at this juncture. Notice global liquidity, it's been on a climb higher. And Bitcoin, when the global liquidity is up, you think Bitcoin would be up. And that's not the same picture. Not trying to say Bitcoin isn't going to go where we think it's still going to go, but we need to get past this 618. We need to start breaking this 117 up here. That bigger picture from that high to that low, that 618 sitting up here, right around that 117-ish. So we need to go breaking out. And I want to see this thing rip toward the upper quadrant up here in the 123, 124, looking at a 1-2. Is this another 1-2 or is this going to be the 3-4? It needs to keep going. So I'm going to keep a keen eye on that. We'll cover this in more detail in a minute. So I still think we got more upside clearly, but we're stuck. The recent high to low, we're kind of testing that 618. You see it right there, kind of testing that level. And so far we hadn't blasted past it. So that could open the door to some new lows and even breaking below 100,000. And I think there's a lot of stops down here at 100,000. So if we were to kind of dip into that, that's going to stop a lot of people out. So if that happens, and we do come down here and dip below 100, this thing is likely going to go reversing very quickly. All right? So be careful. And a lot of people are buying Bitcoin, yes, but if it starts breaking 100,000 psychological barrier, I don't know how many people are going to be jumping in when Bitcoin's going down. And that's another reason the contrarian view is they hit those stops, everybody bails. It's a scam, it's a scam, it's going down, and it'll probably go ripping right after that. So I'm not trying to tell you this is going to happen. No, but if it does, expect once we start dipping below 100,000, this thing's going to reverse very quickly. Okay? But that's concerning that we got all this chopping, overlapping action, even though global liquidity has been just cruising higher in a very strong, grinding higher scenario. We were 100% accurate when we talked about global liquidity. As it would start to get to the blow off top levels, ES would do it. Yes, look at us. We're right below 7,000 in the 6,000, 6,900. Wow, that's what I'm talking about. NASDAQ, we're already into the 26,000 range. Go back months and months and months ago from the bigger picture. When we were talking about this, we'd get that blow off top going into the end of the year. And then likely as we get into 2026, we're going to get the Elizabeth, I'm coming to join you, honey. And we shall see how that plays out. All right. So be in a position of authority, expect some volatility starting tomorrow, and we shall see, do we continue to just grind in a parabolic breakout and then we get the big one? Or do we get a correction followed by one more push into the end of the year, Santa Claus rally, and then we look for this thing to get that final blow off top, and then we start looking for the big one going into next year. That was kind of the plan we looked at, saying all year long that we'd probably get that blow off top going into the end of the year and then the big correction going into next year. Well, that's still on the agenda until proven otherwise. Amen? So let's close and finish that up. ES, again, we exceeded our original targets. Next target up is at 69, which we're already getting closer to, 69.70. And could we just keep grinding next today into tomorrow, and then it's maybe Fed speak that gets the gap to come down? Or we're going to start to fizzle, get a dip into the Fed and get a big dip down in here. Maybe we get that bigger correction, and then we go into the Santa Claus rally. Well, my job is to give you turn by turn GPS coordinates of where we're going. We have tools, we have software, everything you need to give your highest probabilities, the home of the low risk, high reward, high probability trades. That's what this is all about. But definitely be in a position of authority, even looking at the software. Why would we want to be in a position of authority on these markets as they just seem to be grinding into oblivion? Well, look at we're back up at extremes daily, back up at extremes weekly, back up at extremes monthly, back up and still up at extremes. So again, this picture does not go forever and ever and ever, amen. You are going to get corrections, and we're long overdue one. Amen. So what would it look like? Well, do we get a weekly to hook and cross? Like this was a monthly. We got a monthly hook, we got a monthly cross, we got steep slope, we had angle separation. And what did that do for us? What did that do for us? Look at the weekly. The weekly cycled, 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 and we got that nice little dip. Amen. So we're expecting to look for the same. Well, what if we only get a weekly to hook and across? Then we get a daily to cycle. Like we did over here. We had a weekly hook and across, the daily cycled, cycled. So the key of the software is you get a monthly hook and across, steep slope angle separation, the weekly cycles. You get a weekly hook and across, steep slope angle separation, the daily cycles. You get a daily hook and across, the 4-hour cycles. You get a 4-hour hook and across, the 1-hour cycles. So we could use that to our advantage when we're in trades and to know how long do we let the trade run in our favor and what do we expect the software to do in advance, not after the fact. That's the beauty. And it roughly takes about 2 to 5 years for a monthly to cycle. We hadn't had a full monthly cycle since the last financial crisis back in 2007. So we had a full cycle. This one during COVID and the 2022 big pullback here, we didn't go all the way. Look at money flow, only went halfway. Red and blue made it, trend momentum made it, but not like this one. This one, everybody made it. Red, blue, and green of the PAI. Only AI you need to know about is the price AI. That's what you need. And then the trend momentum. Last time, again, we were totally oversold and had a full cycle down was back in 2007 financial crisis. So what is that telling us? We, my friends, are long overdue a monthly cycle down, and not just a partial like that, but all of them down like we did over here and here. Got it? So what's that going to be when that happens? Elizabeth, I'm coming to join you, honey. That's going to be when that happens. And the projected target will be on a monthly chart. So I'm looking for Fibonacci levels. So you would go to ES, we can use that one first, but they're all pretty much the same. And we go out to a monthly chart. And where's that monthly Magic Fibo? Way down here. 37, 3600. Wow. From 7,000, that's, 50% clutch. Could go lower than that, sure. But that's where we're ultimately coming to visit. pay me now, pay me later, this parabolic move. And notice the monthly chart. We haven't touched the monthly Magic Fibo since the financial crisis. And it's not even painting down here, but it was way back in the financial crisis. Got it? And we only then popped to retest it after the bottom and retrace. Then we went on this huge tear. COVID never got down here, came close, but no cigar. So since 2009 bottom, we have not rallied and come back to touch the Magic Fibo. It's been parabolic. We have not had a 618 retracement since then. So it is screaming a 618 retracement. So this is my target zone. When Elizabeth, I come to join you, honey, it's going to be what? Minimum the Magic Fibo, and likely going to include potentially all the way down here toward that 618, maybe 786. And you go, there's no way, Mr. Tucson, that ES during a market crash is going to go from 6,900, 7,000 down to 3,000. That just can't happen. Oh, yeah? So that's what's looming out there. But I still think we're not quite done yet. But I want to see a correction followed by the Santa Claus rally. And then we'll look for our opportunity for this thing to start really taking over. And what could it be? The cracks in the foundation are already here. Credit card debts at all-time high. Car loans, where these people are having to buy 8-year and 6-year and 5-year and all these outrageously long car loans. They're in default. Commercial real estate. Could be a currency that goes bankrupt. Could be a variety of things or multiple things. But it's coming, and this is looming. So it's going to happen sooner than later, but no later than later. So this punch junk euphoria will eventually come to a halt. So zooming in on how do we make money now? Well, that's what we told you, to get to these targets, take your profits, and then look for another dipping opportunity to then make another push at the end of the year. What I'm afraid of, if this thing just continues uncontrollably without giving us a pullback, it's going to happen sooner than we get a correction and continue this journey into the end of the year. Then next year, I'm extremely cautious, looking for opportunities and putting some put spreads on as a insurance policy for the portfolio. Fair enough? So in closing, and my humble opinion, we do not sustain gaps on futures. So this is looming, and that's quite the move back here to that 69, 60, 68, 60 area, down here to that 68.20 area, and we're sitting at basically 100 points, 69.16, 69.20 area. That's about a 100-point gap down here that it has to fill at some point. So again, Mr. Tucson, is this thing just going to grind and then it's Mr. Powell speak at that? Or do we go dipping down here into FOMC and then maybe post rate cut, jawboning, this thing goes up? We shall see. What I don't want to see is if this just keeps going and Mr. Powell jawbone gets its way up towards 7,000, then I'm definitely looking for that big correction coming sooner. If this thing continues to grind higher, even after tomorrow's rate cut and jawboning, all we do is go blasting off. Expect a big one's going to come and still fill this. So if this thing takes off and continues to grind, we're still likely going to come back and fill that gap. Would not be surprised if maybe it's his jawboning that we fill the gap, or we fill the gap prior to his jawboning, but it's coming. So what do you do when you're up like that from that gap zone? pushing upwards of 70, 80 points from the gap, look out and be in a position of authority because that thing is coming. Amen? All righty. NASDAQ, same kind of thing. Had a big gap up here. More in ES than NASDAQ, but I would not be surprised. The same kind of gap from 25.5 up to here about 25.7. Big gap zone that we have to come back and fill the gap. Amen? So what do you do in this scenario? Especially if this thing just continues to run higher. The further it runs from that gap, the more likely it's going to come down and fill it in a more dramatic fashion. So we could see maybe his post FOMC jawboning can make that thing plunge down there very quickly. All right, so just know this is looming. And if you just keep piling because it's going to the moon, Alice, it's never coming down, be careful because I do think it's going to fill that gap. Any questions on the markets? ES is due to fill the gap. NASDAQ is due to fill the gap. Russell likely is going to continue to grind toward that 2600 before it's done. But even though Russell, baby, got a little bit of a gap, we already filled that one from that gap. It already filled it. The other ones have not, so I would not be surprised to see that one fill the gaps as well to join forces. But I do think this is going to continue higher from our recent high to low, 26, 27. I do think this is not the all-time high, and that's it. We're going down. I think any big dip should be bought till we get up here that 26, 2700. Got it? And last but not least, Nikkei, don't think this is the end. We're due for a pullback, but because this thing has just been parabolic, but the target is up here around that 53, 54 area. Now that we reached our initial target, next up is this grouping, 53, 54 area. So a little bit of a pullback would be welcomed for that last end of the year push. But when do I get real nervous that Elizabeth, I'm coming to join you, honey? Fred G. Sanford. Elizabeth, I'm coming to join you, honey. Here comes the big one. Love that show. And looking for this to come down. Yes, I do think so. Remember my bigger quotes, not predictions. Everybody predicts, but I actually give anticipated moves. But looking at, well, it was this one actually, IWM is what I wanted to show you. Go back to a weekly chart from the 2000 over here, 21 top. What did we get? We got a lot of chopping, overlapping, grinding, grunting, laboring action. Even as we're going parabolic right now, this is screaming just like that pound yen that this looks like the makings of a impulsive move down A. All this chopping, grinding is a laborsome B, even though it's going to be expanded flat because we are at new highs. And then we come back down in C, which is going to break below that 160, 165. All of this big support line, this green line, we're due to come below that. We need to make a new swing point low to clean up all of this overlapping, chopping, corrective mess. Got it? So this is what I'm looking for. Even as we get up to my targets, we said 2600, 2700 on IWM. We're talking 256, 265 area that we get up in here. Then I'm going to do a multi-year put spread, looking for some insurance policy, because I do believe when Elizabeth, I'm coming to join you, honey, hits, we're going to go tumbling and we're going to come down and make a new low. Kind of like that pound yen, impulsive move down, followed by a lot of corrective overlapping slop. So we're due for another push lower and to break that low. Got it? That's still the plan. It's just delaying and delaying and delaying and delaying. I didn't think we'd see all-time highs before this thing played out, but that's okay. Sometimes you get those expanded flats where the B wave retraces higher than A. This cannot be a 1, 2. We can't have that as a 1 and then a 2 because the 2 wave can never go higher than the start of the first wave. So this has to be Mr. Tucson A and a B looking for the C. So it's written all over this chart. The higher we go, the more I salivate for the bigger move down, and should be major move because we have to go make a new swing point low below that 160, 165 area. Kind of like I showed you on the pound yen. Fair enough? All righty, let's continue. What about black gold, Texas tea, the Beverly Hillbillies? Be careful. I warned you about we're going to get a bounce, and any big bounce should be sold. Key level to watch. Let's go to a daily at the moment to see if this bounce is over or is this just part of the next surge. This could be the beginning of my A, B, C, then we go down, or this could be already be the end. Why is that important? Well, Mr. Tucson, guess what we hit? From the recent high to the recent low, we hit the 618 and rejected. Remember these things we always do? We hit the 618. Here's the zone up here, 618, 786. That's the zone. We touched the 618 basically to the tick, and we got rejected. I did say sell rallies. I've been saying sell rallies. We're due to make a new swing point low. I think we're going down to 50, maybe the low 50s to 50 and lower. But is this the end? Or after this move down, is this the beginning of potentially A, B, C? So what do we need to do? We need to run from the swing point low up to the current swing point high. We need to watch this support zone. We're going to force price to prove its intentions on how we think this is going to play out. So we have resistance up here. We have support down there. Change that to green. Flip, continue to go back. Nothing but boxes everywhere, but you get the point that if we hold this retracement, then we should go breaking out toward the Magic Fibo up here. So I did nibble on the SCO because I'm expecting what? Black gold to go down. When black gold goes down, SCO goes up, right? So we got the pullback on the bounce. And is this ready to go blasting off? Or is this the beginning of this move? And we get a little continuation. Then we go higher. So I'm already in this, looking for this thing to go blasting. But if we do dip down to 1750 or lower, I have some resting orders down here to see if, hey, good till cancel. If this thing dips where oil prices rip a little, another push, get that little last push, this thing will dip, get some more, and look for the blast off. So what is SCO? It is the ultra short. So when oil prices go crashing down to 50 and lower, that's the plan, this thing is going to go ripping higher, which that last little push went up to 20 from where we talked about this. Now we got a nice little Fibonacci retracement to our what? Magic Fibo. Is this the measured bounce? What would we be targeting? Be targeting from the same rule, low, high, higher, low. So let me run a fresh one on here for you. I got a lot of them on here, but I'll run a fresh one just to show you what that looks like. And from the recent low up to the high, we came down and tested that 618 zone. So is this the end of that correction and it's over, ready to go blasting off? Well, what would be my target if that is the case? 3.2, low, high, higher low. My target should be 21, 22 area up here. Maybe we get feisty and start pushing towards 24. And you think, well, that's not that big a move. Well, it is what it is. Doesn't have to be a big move. Play options on that. It's already leveraged. So it tends to move as oil prices go lower, this thing goes higher. Got it? So I told you I started nibbling the other day during that pullback. We look for that. And if we get a lower high, lower low, even better, then I can get some more, because as oil crumbles and hits that low 50s to 50 and lower, this thing is expected to go blasting off. And when we finally start closing above $20.68, we came close, but we didn't quite get it. We start closing above that, then the door's ajar to look for 25, 27 target. Amen? So what would it take for this SCO to go ripping up there? Oil is going to have to go plummeting below 50. Oil gets below 50 into the 40s. I think there's a very high probability we're going to be up there. That's the plan. All righty. All right. What about gold? Who warned you about correction on gold? Man, during that grind, I was looking for this thing to break down sooner, and we went on that crazy run. And I even told you, be careful, this thing's getting outrageously rampant on that. Look out. And sure enough, we're breaking down. So what's the projected path? This thing's likely coming down to Magic Fibo. So in the short term, believe it or not, any rally should be sold short term. What? Everybody's buying gold. Are you out of your mind to sell rallies on gold? Yeah, I don't think this is quite finished. I don't think so. Likely going to come down toward that Magic Fibo. I've been looking for that Magic Fibo touch for a very long time, and we may get it this time, right? I thought we'd get it over here. We didn't get it. I thought we'd get it over there. We didn't get it. It's been a while, and we're overdue. Amen? So right now, we're sitting somewhere around that 3,500. Another $400 plus. So I don't think this is the end. Well, why isn't it? That might be a little three-wave move, right, Mr. Tucson? A little A, B, C, and maybe that's the end. You know, that is the end of that little bounce. We still didn't quite reach our equality of the initial move down. We didn't reach equality, so that's another reason why I don't think it's quite finished. So I would say the likelihood that this is a little three-wave correction that's over and we're going blasting off to new highs is extremely low. And what I'm still looking for is a little three-wave correction, but I don't think that is it, right? We're not at proportions of it yet. So I still think there's more downside. And that B wave, if that is one, is very suspect because it wasn't much of a retracement. I was looking for a deeper retracement to go up and hit that 618. We didn't get it. We did break lower, but you can have an A wave. This could be a little three wave and an A wave. And this could be the A as we break even lower. Then we get a B, so the high to whatever that low is, where we retrace, get a 618 in there, that could be the B, and then we come down in that C and still visit that Magic Fibo. We could very quickly get down there. Maybe it's the FOMC that does it. We shall see. But any short-term rally should be looked to be sold, not expecting this bottom reversal and ready to go breaking out to new highs. And we come over here to the software and we say, how about it, Mr. Gold and Mr. Silver? Here's our gold. Actually, it's this one over here with the software, sorry. That one right there. My 4-hour reversing, that's part of a little bit of bounce. So what happened? We got a daily hook and a cross. So what happened? The 4-hour cycle down. We got a weekly that's hooking and crossing. See it? And what did I say the other day? Is that had that big drop on that one day? Said it's not over because the weekly hook and a cross dictates that highest probability we're going to get a daily cycle down, Mr. Tucson. And guess what? Red line of the PAI is there. Blue line short. Money flow is not even halfway. And even trend momentum 1 is not down. So that's another reason why you should be selling rallies in the short term, because this will cycle down. Red's there. We got to get blue there. We still need green money flow, the most important one. All three down, and at least trend momentum 1. Maybe we get trend momentum 1 and 2, like one of those over there. But that's the plan. The weekly hook and across, steep slope angle separation is screaming. Finish the daily cycle, Emil. Finish it. It's not done. Money flow is barely even halfway. More downside is coming. So what? Any rally should be sold, in my humble opinion. Amen? What about silver? Ditto, right? It is absolute ditto on silver. Absolute ditto. We got the weekly hook and across. We got steep slope. We got angle separation. And what does that tell us about silver? The daily needs to finish the cycle. It's like same thing as gold. We're halfway. Still got more for that to go. Still got more for the trend momentums to go. And what are we likely going to visit? Down here at the Magic Fibo. Any questions? So if you look at silver over here, whether you look at SLV, that's one I like to trade, is this is likely going to finish the cycle down. Well, what about SLV? What does it look like? Well, you can come over here to Ninja Trader and we can hop in here. How about that REMX? We talked about that pulling back down. Look where I'm drawing it to go. That was a couple of weeks ago. I think it was Harold that asked it, or maybe Emil. Somebody asked me to look at that ETF. And I said, we're due to come back and reach the Magic Fibo. You can see it right there, that line that's going through our Ichimoku cloud. And sure enough, we're doing the same thing on this. The daily needs to finish the cycle. It's not finished. And I know I'm jumping to this ETF, but it's the same rule. Because why? Weekly's got a hook, it's got a cross, it's got steep slope, it's got angle separation. So what's the likelihood this REMX continues to go lower? Extremely high probability. So any rally in the short term should be sold. And why are we seeing a little bit of a bounce like gold and silver? Come over here, 4-hour, and we don't have, let me fix that. Data series. And 5 days, let's make that 365 days. I don't know why that's only on 5 days. 365 days. So we could see the same type of thing, that the 4-hour is starting to bounce a little bit. We got a little bit of a pop. It's slingshotting back over in the direction of the daily. No surprise. So any rally should be sold in the short term as well. So back to SLV, you can see what that looks like with the software on it. SLV, let me go to the daily. My 4 hours getting oversold. My daily is still pushing. And why do we expect this? I'm going to draw the Picasso for you. This should continue lower. This should continue lower. These should continue lower. And the price is likely going to go hunting our Magic Fibo down here, the big orange line. So I do expect more downside. And why is that? For the exact same reasons. We have a weekly what? PAI hook, trend momentum cross. We got slope. We got angle separation. The music is speaking loudly that gold and silver are due to go further down as my weekly has given us that hook, cross, slope, angle separation. That's what we call the hook and cross strategy. You get a PAI hook, you get a trend momentum cross, you get slope, you get angle separation, and that is a weekly chart. So what does it tell us? Highest of highest probability? The daily is going to cycle. Ha ha. And even after that big dip already, we're not there. Check it out. Red and blue have made it, but money flow has not. That's not a PAI cycle. Trend momentum is not quite there either. That is not a complete cycle. So any rally should be sold short term as this goes and finishes that cycle. What a thing of beauty. Amen. And what could we have done there? We could go into our strategies, and we could have added our little MPA strategies. We could have did our instant order, did a trade management system, set it all up, connected, and when we could, while this thing was going higher, could have sold the rally, and bingo. That's what I love about the hook and cross strategy. So in closing, I expect gold and silver to grind lower in the coming days as this daily finishes the cycle, and that's the plan. So any rally should be sold. Got it? All righty. And you see where the Magic Fibo is on this chart. While I'm looking at there, I'm looking at it on NinjaTrader 8. That's the daily. We're looking for this thing to come around right around that 36, 37. On this platform, same thing. 36 area, see it? Right there. So any short-term rally should be sold as we continue to break down toward that 36 and change. This thing is slightly sloping upward, so what if we take a few days and we grind? Maybe we get to just 37. But that's the plan, that 37, 36 area is where I think we're headed. We don't hold that, we could definitely go lower, but we shall see. But up and until then, sell rallies, we're going lower till we finish that cycle. Any questions? So no matter how you slice it, gold's overdue, weekly hook and across, daily needs to finish the cycle. So far, so good. I think we're going further down. That's the plan. And what about Bitcoin? Again, I'm a little concerned because we saw what the gentleman right here has been doing. Our Nikkei has been just ripping higher while Bitcoin has been overlapping and chopping. Look at that run, Emil. Whew, crazy. Global liquidity is just soaring higher, but as of late, Bitcoin typically follows the money, and we've been chopping as of late. We did have the initial surge, but as of late, we've been chopping. That is a little concerning. But again, we're watching these lows. We kind of pegged that from last week. When we zoom in on current price action, we talked about we were likely going to get a new swing point low. We got that. Then we talked about, do we hold the 618786 zone? If we did, we would go back to that high and make a new high. Done that. What's next? We don't need to peter out from the recent high to low. That is the 618 we tested right there. 618. That's what we're testing. So from that high to that low, 618 test. And what does that tell us? Well, from the recent high to low, we broke that 618. So we're likely going to go up towards this 117 area. So let me take these off and show you from scratch because it's kind of overwhelming with all these letter numbers on here. I got so many of them, but I like to start with a clean slate and we can talk about this. From the recent low to the recent high, we held the 618786. This is what we were talking about last week, that if Bitcoin held that, we were likely going to go breaking the new highs. And where's the new highs come into play? Well, the downside is from this high, and I'm going to run a fresh one up there. Let me take that out for 1 second. From the recent high to the recent low, we got this area we need to break above. So that 117-ish, 117,600 area, that's what this big resistance box is up here. We need to take that out. Once we do, once we grind into this zone, get a candle body, not a wick, but a body close above that 17,600, 17,700, 17,700, then we have a 75% chance we're going to go visit 130, 129.50, 129,500, and 132.4. I don't like the fact that we're grinding toward this and kind of, uh-oh, that could set the tone. We make yet another new swing point low. 101, 100, maybe dip down into 100. And like I started saying earlier, if we get that dip below 100, I think it's going to hit a bunch of stops down here and force people to hit stops, which means they have to buy to get out of that position and look for this thing to go soaring higher. I think it would be a quick kind of reversal if we dip down here. But in the short term, I want to see this thing finish the momentum. I like the fact that it broke that high, but since it's broke it, it's not doing much, so that's a little concerning. And then we still got to go up to this 618786 resistance box to set the tone for the bigger move higher. And that's what I want to see. Bitcoin hit to the 130s so that Mara, BTBT, a lot of the miners start to go parabolic. So is this thing going to gather some giddy up here and get through this to go blasting off? Or we're going to fizzle and start breaking down? So just like the last time, Mr. Tucson, we did the same kind of thing. Well, we had a pop, we had a drop, we held to continue. Well, we could do the same off of this recent low up to the current high. We need to hold that Magic Fibo. Why? Because just below that Magic Fibo from this recent low to high, you can see, I'll move this one first so we can see what that looks like, and take this out so I can just focus on those numbers. From that low to that high, 618 is right at the Magic Fibo. 786 is right below the Magic Fibo. So what we don't want to see from that low to that high is we start closing below, say, 108 or the Magic Fibo, then the door's ajar to go down here to 103, 100, making that new swing point low. Long as this latest bounce holds the Magic Fibo, that's fine. Then we could bounce and maybe get enough momentum to then go blasting off. So this is critical right now, and the Magic Fibo happens to be my 618 because of this little recent low to high. That's that support zone. As long as that holds, I'm looking for more upside. When I really expect Bitcoin to go ripping is when we start clearing this hurdle up here, then the door is ajar to go up to that 129, 132 area, which is what? That is the recent high here, down to the recent low. That's my 618786. So when we break that, 130, 132 is in the cards. 129.5, 129.7, see it? And I think if we clear this hurdle, we should go up there quickly. Not a slow daily couple of grind for weeks and weeks and weeks and weeks to get up there. I think we should go ripping up there. And then cascade effect when we get up in the 130s, Mara and a lot of our other positions ought to go soaring higher as well. Any questions on that? Ripping higher when it starts to clear that hurdle. And why do I think it's going to go parabolic? Because we can go back here to the last time Mara had a Bitcoin halving cycle. And when Bitcoin reaches that certain threshold, the profit margin for these miners goes insane and you get these parabolic moves. And we haven't had it. Since our halving in 2024, we have not had the rip parabolic move we saw the last halving. Got it? I still think that's coming. And when should that occur? Is when Bitcoin hits 130,000 and higher, this thing ought to go parabolic again. So I'm looking for that. Amen? And the same thing with BTBT, etc. Well, when we started talking about buying this, we're more than doubled where we entered on shares, and I'm looking for a big surge. But even BTBT, what did it do the last halving? It went parabolic. And since our halving in 2024, we have not gone parabolic, to say the least. So I still think this is in the cards. When Bitcoin starts to hit 130,000 and higher, this thing ought to go ripping. And we're already doubled our money based on where we were getting in on these lows to where we are. We even tipped up to almost 2.5 times as it went toward that price here. We tested it, pulled back, tested, pulled back. But man, I'm waiting for this thing to go soaring. Amen? I think minimum, if BTBT is likely going to be a dud, and when you double and stuff your money and that's a dud, now we're talking this thing ought to go test that $20 range. From the recent high to the low, we'd likely go test the 618 at about 20 bucks. That's quite the move. That's a 10x to get up there. So I do think when this thing goes parabolic, I think it would at least go toward 20 bucks. One of those parabolic moves. And could we possibly break out? Yeah, if Bitcoin blows past 150, starts pushing 170 or higher, there might be a good chance this thing does go parabolic and exceed the prior high of the former halving and go into some extension. But that's when this gets interesting. When Mr. BTBT, Ian, gets in this 2620 zone, if we can go breaking above that, then there's a 75% chance we're going to go to 37. So what's the strategy? The strategy is when Bitcoin gets to where we want it to be in the 130s and pushing higher, when this thing starts to go parabolic, I'm going to be starting to sell hundreds and hundreds and hundreds of shares because from $2 to 20 bucks is insane. And yes, it could even double that potentially, but I'm going to start taking some profits when we get to the stratosphere. And whatever it is, let's just say it's a total dud. And during this parabolic move, when Bitcoin hits 130, pushing toward 150 and higher, this thing goes parabolic to $12 or $15 and is a total dud. From $2 and lower to 10, that's 5x. 15, 16, that's 8x. I mean, come on. How much does it take for you to finally go, yeah, that's a hell of a trade? I digress. but that's the plan. When we get up to those extensions, I think it could even get interesting to go way higher. But for now, I'll be thrilled when it starts hitting near 20. I'd be thrilled. And again, the halving, it goes parabolic. We're at the halving and we haven't gone parabolic. We've been in the halving and we haven't gone anywhere yet. It's kind of chopped sideways. So when do I think it goes parabolic? One last time for those joining it, is for when Bitcoin hits 130, pushing 130 to 150, 170, etc. When Bitcoin hits that 130-ish and starts ripping higher, this thing ought to go parabolic again like it did the last halving. All right? All righty then. So, notice we didn't get parabolic until the very end of that crypto cycle, December. So, is it going to take for us to go parabolic by December? Only a couple more months? Maybe. We shall see. But remember to look for Bitcoin hitting 130. And that's why I want to see this play out like we've been talking about, that Bitcoin gets there. We need to get above this zone, because we get above that and we start clearing this pink box, then guess where we're headed? Highest of highest of highest probability. We're going to 130s. Amen? Any questions? And when that happens, we start hitting the 130s, and that travel from 130 to 40s to 50s. Here's our long-term target since 2022 low. We talked about Bitcoin getting up to 150, 170 area. So when we start to clear this hurdle, we bring into the area of interest at 130, which should send the miners like Mara, BTBT, Riot, there's a bunch of them out there that can go parabolic as well. Fair enough? All righty. What about Ethereum? It too is just kind of chopping and grinding. It's trying to build enough momentum to finally go blasting off. So same thing here, the recent bounce, holding the Magic Fibo, holding the Magic Fibo, holding the Magic Fibo. I think this is where it's charging its batteries, looking for a blast off. And the plan is to go up toward that 62-ish. The big picture, go to a weekly, and we go back to where the last halving was. We have the swing point low from the all-time high to the crypto winter low. Price action broke the 618 and the 786. So that's screaming we're going to 55, 6,000. And I'm targeting this little quadra up here around that 62, 63 area. Could we go higher than that? The higher we go, the better. We start breaking 62 area, 63, then we got the 7,000 target looming. But that's the plan for this thing to go ripping sooner than later, but no later than later. And when it does, our ETHU should go ripping with it. And we're just kind of grinding right now, waiting for Ethereum to go blasting off. But as Harold can attest, from the high to the low, when we got that low, and I said when Ethereum goes running back to 4,000, which I think it'll at least go back to 4,000, when it does, ETHU is going to go to 160 to 200 level. Went right dab in the middle, right up about 190. What was that high? 188.73. Not too shabby. And I do think we can get up to the 280, 300 if Bitcoin, when Bitcoin gets to its 150, 170 and pushes, Ethereum gets to its 6,000, 62, 6,300 target, like I think it's going to go. And if we blow past that towards 7,000, I think we'll definitely start pushing the upper twos to threes even on this. So what's the minimum? We get the push into that 5,500 to 6,000, which is the initial targets for Ethereum. I think that's going to push us into the 200 to 250 range. So like when I said Ethereum went to 4,000, this would go somewhere into that category. Well, when Ethereum starts pushing 5,500, 6,000, we should be somewhere between 200 and 250. And if Ethereum could go blasting off towards 7,000 or higher, that would get us up into the upper twos, maybe pushing 3. All right. So I still own my shares of this. I bought it when we had that dip, and before the splitsy, it was $4. Filled went up to $12, and it doesn't look like that on this chart because we had a splitsy here, and that's what it did. I took that money, bought some more, and this is the house's money, and already we're well into profit off of that. And I'm looking for a lot more still to come. Even if it's a disappointment and Ethereum only gets to 55, 6,000, we should get up to that 200, 250 level. And if we blow past that, pushing towards 7,000 and more, we should be up here around that upper 2 to 300 range. Amen? All righty. So that's the way I play a lot of these. I like leverage products without options per se. You can do these leveraged ETFs. And typically when Ethereum goes up 10%, double that would be 20%, etc. It goes up 50%, this should go up 100%, that same type of thing. And let's just see what that looks like today. If we were going to get this to move from roughly where we are, about 4,000, somewhere about right there, and we go up to test at 6,000, right about there. That's basically a 48, 50% run, right? Roughly about a 50% run to get up there 6,000. So what would that mean for ETHU? That would be a 100% run and 100% from 120, where we currently are. 100% would be somewhere around 250 to 240, right? Somewhere in that zone. And what if we get to 6,500, like 6,000-ish, kind of what we're targeting? Where should it be? Somewhere between 2 and 250. See where that comes from? Even on current action. If Ethereum can go up about 50% to get to 6,000, then that means ETHU should move somewhere double that, somewhere near 100%, which would get us up above that 200, 250 target zone. Thing of beauty. Absolutely gorgeous. Anybody have any symbols they want to look at today? If not, nobody's got any particular things they want to look at, I'll circle the wagon. But several things I'm looking at right now is my SCO. I bought the dip, and I'm looking for this thing to go squirting as what? Oil prices break down. SCO inverse, this ultra short ETF, goes spiking. And the plan is for what oil to do? Oil to go breaking down in the low 50s, 52 and lower. And as we go down to 52 and lower, is the plan that we see SCO go breaking out potentially toward that 24. Let me go over here to the daily so you can focus on those levels, that we should go breaking out towards our 20. Once we get above 20, it starts to get interesting. And when we close above that 2022 zone, which is 618786, then the doors ajar to go up here at 2527. So the last time SCO did a big spike right there is when what? Oil prices plummeted to 55. So when oil prices plummet to 50 and lower, we should at least spike into the 20s. And likely we break this little zone here, 618786. the doors ajar to go up to 25.80, 27. That's the plan. Other things on my radar, obviously, is silver and gold, continuing the dip. So please don't buy this thinking silver's done. It's a big enough correction. It's over. You better buy this dip because this thing's going, Gary even said it, it's going to 67. He guaranteed it. There are no guarantees. I guarantee it's going to 60, 70. Yeah, I do believe it wholeheartedly and then some. I think this is conservative where it's going, but I don't think this is the dip that's over. We didn't go deep enough to start, and based on the software is the biggie that we still got the daily cycle to finish, right? Still got that daily cycle to finish. Why, Harold? Because we got a weekly hook and a cross. Deep slope, angle separation, screaming this daily is highest of highest of highest probabilities, going to engage, disengage, grunt and grind, and just laboring decline to finish the cycle. Red and blue are there, but who's not? Money flow. That is not a PAI cycle. That is not a trend momentum cycle yet. So neither one are saying that down move is over, in my humble opinion. So in the short term, any rally should be sold, and we're likely coming down toward the Magic Fibo. And that's these lines here. And on this one, I colored them in, and it's this line there. Got it? Gold, same thing, whether you look at gold or futures gold, either way, expecting more downside. Same equation. That's a beautiful move lower. It was up here, and we're down over $400+, and we likely got 400 more to go. How about that? That's the plan. And the same thing, whether you're looking at it in NinjaTrader or MetaTrader, doesn't matter. Same thing for gold. Daily cycle's not finished. And we have a weekly what? PAI hook, trend momentum cross. We have slope. We have angle and separation where green is below the red line, angle and separation, stating the daily will finish the cycle, highest of highest of highest probability. And why isn't that a finished cycle? Because money flow is barely halfway. And our trend momentum's barely halfway. So it's not over. So in the short term, any rally should be sold. Got it? All righty. Let's continue. Rinse and repeat on the markets. What is tomorrow? Tomorrow is the big one. What Mr. Fed Chair doing his FOMC. And in my humble opinion, they're going to cut rates by 25 basis points. And why are we so confident? Because it says it here? No. The reason I'm more confident is because our DGS2, which is the 2-year maturity rate versus the Fed's current rate, that orangey line right there, that's the Magic Fibo. This is the line we're talking about. And we have plenty of room to make a cut with maturity rate here, Fed rate there, plenty of room to cut 25 basis points. Got it? So in my humble opinion, Mr. Powell is going to cut rates yet again tomorrow. The question is, what's the man going to say after? So that ties in with this picture, Harold, James, Ian. Go back here, go back to ES, and we have a gap up on ES. Go to the 15-minute. And this is heavily likely, as I was warning you about, look for this thing to keep grinding. We need to fill that gap fill. You typically do not see gaps on ES that don't get filled. So highest of highest probability, we're due either go down, maybe overnight we fill the gap, or we just kind of chop and grind and then post Powell speak, Fed speak, we gap down. Somewhere we need to go fill in the gap, right? So be careful. I would not be buying this right now thinking it's going to the moon, Alice, because we have already, go to the daily view, we've already reached and exceeded our extension that we were looking for. Last week, we said highest of highest probability. We're going to go visit 68.50, 68.85. We exceeded it. We don't have to go any higher. We need a pullback. And that pullback should fill that gap fill down here, which is off of that 15-minute. Amen? There it is. So we need to fill that 68.60 down to 68.20 zone, gap fill. We don't hold the gap fill, then the door's ajar to go deeper. And if you look at the bigger picture with my little circles, the plan was this thing to get up to the extensions, come back for a pullback, and then the end of the year rally, blow off top, and then we go into next year, Elizabeth, I'm coming to join you. So we'll see how that plays out. But needless to say, please be careful. Knowing there's a gap fill of another 100 plus points to go to get down in that 68 area, 68.60, 68.20, that we need to fill the gap at least, if not exceed. And maybe this was just a little over exuberance to reach that target. We come back even deeper towards 67, 6600 to then bounce and push toward that extension up there. And I did make a statement, what if we don't and we just keep grinding higher without a pullback? Then I think we're going to get the bigger correction sooner than perhaps the end of the year. I'm still looking for a pullback, then the Santa Claus rally, pushing us to the blow off top. NASDAQ is ditto. We got a gap up. We typically need to fill the gap. You go to the 15-minute, you can see it a lot easier. And you see the big gap there, big gap. So Harold, I think we're going to grind down and fill that 25.7, 25.5 area. Could it be we don't do it until maybe Mr. Fed speak tomorrow afternoon? We dip down in there to bounce and go higher and do the blow off top? Or do we start this overnight going into tomorrow, kind of fill the gap? Still get some sort of Fed speak that the markets kind of regurgitate a little bit before we then go blow off. But all I can say is I don't think this is the all-time high, and that's it, folks. I still think we're going to get the Santa Claus rally, and I'd like to see this at least gap fill of a few hundred points, and if not, come down even further, like the bigger picture we drew these, that we'd rally to this zone, pull back, and then get another push. So maybe we just need to move that up and move this guy over there, kind of, reset it a little bit, and then move that guy further out. But that's kind of the plan. That I don't see this thing continuing just to go straight up. I think when we get some sort of correction, a gap fill, and again, it could be just his jawboning fills the gap, but be extremely careful. And as you drill down, this might be the beginning of this little gap fill. Maybe we do it overnight. But I would not be loading up the boat, trading futures to the upside, expecting this thing's going to just keep going without a pullback. We're long overdue. Especially when you see this type of move, right, Harold? We got what we wanted. We reached the targets we talked about. We even exceeded it. I said we'd go to 25.6, 25.8. Been there, done that. Could this thing just keep going? Anything's possible, sure. It can just keep going. But if we get this thing to just keep going without any type of pullback, the big one's coming sooner than later. Probably even before the end of the year. Now, if we get the pullback I'm looking for, great. Then we do the end of the year Santa Claus rally going into the end of the year. That's kind of the plan. So I would be in a position of authority, expecting at least a pullback to that gap up right there. So we pull back toward 25.7, 25.5. You can see the gap. That's where this would come in. And we get this little dip, end of the year rip. And then we could talk about next year into 26, maybe that's the top in reversal. What was the three things and barometers I'm looking for? I want to see ES, NASDAQ at their blow off tops. I want to see the Nikkei, which is global liquidity, up here toward my new target now, which is at 53-ish, 52, 53 area. And most importantly, I want to see the equal weighted SP 500, equal weighted. I want to see that up here in its target zone of this 194, 198 zone. So when I see all of that, NASDAQ's at all-time highs, ES is at all-time highs, Dow's at all-time high, global liquidity, Nikkei up at that 53,000 and higher, and RSP equal weighted up here at these extensions, that's getting eerily close to being, it's about that time. And Emil, when I see that, this guy up here, ES at blow off top, NASDAQ, Russell, all those we talked about, and those zones, and this is up there too, then I'm going to look to do my leveraged products for hedging, like put spreads on IWM, for example, maybe a little put spread on ES, we'll see. I'll kind of let you know what I'm thinking at the time in which I'm thinking it. And to close, there are no buy, sell to hold recommendations. I'm not a certified financial planner. I don't want to be one. This is intended to be informational, informative, and most importantly, not only informative and informational, but fun. A little kick in the step, a little dance, a little jig. As when we get up to these nosebleed sections, especially on this guy with the rest, that's like, Elizabeth, you better be looking out, honey. Here I'm coming to join you, and I'm looking for the big sell-off. We're not there yet. So any pullback should be bought for the year-end blow-off. And when we get year-end blow-off and we see all these things come to pass, just real quickly, NASDAQ or Nikkei, global liquidity, look at that run. So I don't think this is in yet. Kind of looking to go up here at 52, 53 area. The RSP to get up to that 194, 198 zone. ES up in the upper quadrant up here, pushing that 69 or higher. NASDAQ pushing that 27 and higher. That when they all do that, and IWM pushing that 260 to 265-ish or higher, that's when it's time to take some drastic measures. And that's probably will be, as we go into the end of the year, blow off top scenario we've been talking about all year. Fair enough? So with that, I'll say good luck, God bless you, may the pips be with you. I'm humbled and honored to be your mentor and instructor, and join us again tomorrow. That's it, and that's all.